Doing underway.
I wonder why fund managers can't beat the S&P 500? Because they're sheep. And sheep get slaughtered.
We have concluded the following.
Because I know more than anybody.
Cold winter has apparently not affected the orange harvest.
Ladies and gentlemen, welcome back to Season 3, Episode 2 of Pounding the Table. Thank you to everyone that's been joining our spaces midweek. Huge shout out to Rahul and KT, all of our internet friends who've been holding on that front in between the podcasts. Got a lot to talk about here on this episode. Job numbers were up big. The U.S. 10-year continues to climb. And we'll be talking a little bit about the StockTwits trending tickers of the week. So they got a really cool new crypto platform we'll be talking about here. But some of the stocks that had these earnings: Facebook, PayPal, Pinterest, Snapchat, Google, AMD, Spotify, and Ford. Crazy movement. Snapchat literally broke my screen when I was checking it. So we'll be talking about those a little bit here on this episode. And Tony, welcome back, man. You've had a rough few weeks. I know you were traveling and we kind of kept it on the hush, but now you said we could talk about it. So you're here recovering from COVID, man. How you feeling?
Yeah, I've been better. I think I got a few more days left until it's like completely over, but I'm feeling much better. There was like a week where every day, like you said, felt like a train hit me in the head, but much better. Drank a bunch of water, took a bunch of zinc and vitamins, and ready to rock and roll.
Glad to have you back. We kind of jump started season 3, but this is kind of the real episode 1 of season 3. So you were talking to me about how you've really had some time now. Maybe it was during COVID or during your travel time where you actually had some time to reflect and kind of rethink how you want to position. I don't know if it's still the bonsai or how you're looking at your portfolio today.
Yeah, bonsai is always the bonsai. I feel like that's always going to be something that, it's just good, proper management of whatever you're investing in, for whether it's stocks, Pokemon cards, or crypto, whatever it might be. We were just talking like an hour before the show, just like screaming all these different stock things. And we were like, what are we going to talk about this week? But honestly, there's so many things to talk about just because this market, it's been a little bit. And also this market's just every single day you get some really interesting news that you're just wondering how. Like I started noticing, a few trends like in the last week or two where you kind of see like all these names that have just been getting hammered and hammered. Like, I don't know if it's making like a temporary bottom, but the downside of it, of how many stocks every day are just continuing to go down kind of situation that are not like the FANG stocks. That's kind of been like abated a bit. And so you're seeing with all these earnings happening, stocks getting priced based on where people, are actually going to value them in the future. So, and I think earnings are a really good like reason why, because, you've seen Google ran a ton and that was good for the market, like right when we were looking really, really bad. And then Facebook tanked the market. But then we realized, Facebook was just like a singular issue with Facebook. And then Snapchat, it dumped on Facebook and then it rallied on their own earnings. So instead of everything just being lumped in and being unable to run, like yesterday when Amazon reported earnings, Amazon crushed it. And we definitely want to talk about that deeper. But it was really nice to see that, all the stocks that would benefit from what Amazon benefits from in their business lines, e-commerce being obviously one of the biggest lines, but also AWS, right? So their cloud, that's their big cash cow, that's their moneymaker. And there are a lot of focus on e-commerce and that focus on cloud. And then, just knowing that they're able to raise those prime prices, it's very, very bullish, like, especially since they already beat EPS. They did like 27 a share versus like 3.89. So huge beat there, beat on everything. Honestly, what more could you ask for? And they're raising prime price is $20. So that's just going to go right on their, like, they have to revise estimates up whatever percent that's going to be that makes up their total revenues. So that's why it ran up so much. It was also down $300 the day of earnings, which was pretty crazy to consider. Like that company was just down and Google and everyone was just down because of Facebook, right? Because Facebook's a big part of the NASDAQ and part of the S&P. So those things run kind of like together, right? Like if you hold FANG, Facebook's the first one.
Yeah, I just want to jump in there because I was trying to look up the number. It's about 200 million members globally Amazon Prime has. So
nice.
20% on all those people. That is that's no joke. And Amazon has been like kind of the quiet one, I feel like, out of all of them. And so this is interesting to see. And Facebook absolutely shit in the bed, like you mentioned. Do you think it was justified? I mean, they definitely missed, but is this something that you anticipate, like the kind of the downfall of Facebook right now? I know they're transitioning to Meta, but
so like I had a lot of thoughts about this because I was talking to some friends about Facebook yesterday, and like my mom holds a bunch of Facebook too. I really do think that like Facebook held up super well because of the metaverse. And like that is like, and I even buy into that metaverse trend for Facebook in the long run. Obviously, I've said that too. Like, I do think that they have Oculus, and everyone who I've ever spoken to about Oculus all love their Oculus. And they're definitely going to be the ones that come out with like the next Oculus that just like goes over your face and doesn't have the big thing. And you can just like, it's like sunglasses pretty much. And so people are going to be using the metaverse, and like whether or not people want to admit that, like it's happening already right now, and it's been happening for a long time, right? Like when your kids are playing Roblox, that's a metaverse. Like when your teenage son's playing Minecraft till 5 a.m, metaverse. And I know they also scrapped off part of their crypto business because of like the fear of regulations and the Fed and talking about them like with their coin. But I do think that like as far as it comes to the number of users they have, and I think it's obviously a different audience because like that's why Snap did so well, right? Like one of my buddies says all of his kids in his class still use Snap Messenger. Like I used Snap Messenger in high school. So shocking to see that like that continues because none of those kids are using Facebook. So it's definitely like a difference in the generation. And I think people are assessing way more value towards those people who are like those companies that are getting the attention from the younger crowd, because that's where the most will come from. For this, obviously, like the younger you are, you'll be playing games, you'll be in the metaverse, and you'll be more just accepting of it in general. So like I think that there's that connect, but also Facebook does have 3 billion active users. I do think that they're going to be able to pull it off, especially with Oculus. But I think that held it up for a while, and it would have been tanking just the way that Snap tanked so much as a social media platform and everything. Had it not had that like metaverse like hype to it, keeping it up.
Yeah, because obviously the majority of this is coming from ads. And so that's the biggest, I think, for Facebook. People are looking at that. And then to your point with the younger generation, that's kind of like the future spenders, if you will. That is, indicative. If people aren't using Facebook, they're still on Instagram, of course. But you're right. I mean, people are moving to Snapchat. There's Reddit. I mean, a million different things. People are chilling in Discord groups and whatnot too.
Exactly. I think
Tony's
Discord,
walking around the fraternity right now.
Yeah, I think that Discord had like a really, really big impact on that as well. Cause like the number of people who are now using Discord, and people obviously used it before, but like this whole wave of crypto and like metaverse and Web3 has really given Discord, a ton of time by people. And it's not just people my age. Like there are people who are 30, 40, 50, 60, like in Discord talking to people all day long. And so I feel like just the way that we communicate is a little different. Like people, instead of wanting to post, your story or whatever Facebook does these days, like post, your status. Right. Like people are wanting that more immediate connection. So I think it's all just like along the lines of it. So I love that they're pivoting right to the metaverse. And I don't think by any means it's going like, if they still make a shit ton of money. It's just that, people valued it in a certain way. And I think that you've been able to see that there's other companies that are just doing better. And so, I think that's why I had that big, massive sell off. I think that it's just like one of those situations where the company will just take time to develop out the metaverse. And like, I don't think you can really win the metaverse. Like, I don't think a company is going to actually win it. Like the only other one that I could, and I do think that this has a play in with like people selling off Facebook, is that Microsoft acquired Activision.
Yeah. That's so funny. I was literally saying, like, how much of an impact do you think that like scared off investors saying, okay, shit, like Microsoft's a player here now too?
I mean, Microsoft, and everyone knows this, like if you're an Xbox, even a PS like 4 fan, like, or whatever, PS, like PlayStation fan, that Xbox and Microsoft, they literally make the gaming PC, right? Like people who actually game, they don't use Macs to game. And you're not really doing games on Facebook besides Candy Crush, or whatever other, I don't know what other games people are playing these days, but it was a big acquisition by Microsoft. And that is a clear play for the metaverse. It's like as clear as day. Right. So that I like Microsoft a lot more now. I've been playing Xbox since I was like 7, but knowing that they are thinking about it. And I wonder if it's, just because of the time, but they've also been in it forever, right? They've done Xbox, like they specifically make gaming computers. And I think that that's just going to carry them forward, honestly. And obviously Microsoft's one of the best, most efficient companies in the world. But I would be also scared, knowing that you could buy out a company that makes Oculus Rift and then just connect it to your Xbox, and you already have, so many millions and whatever of users. I mean, the thesis for like the metaverse in general, I know people think it's many years away. Like, I don't think so. I think it's really right now. Why do you think Roblox got to where it did? Even though, it came down, and same with Unity. But, I think that these things will take time, and especially just for adoption, for people to say this is cool.
Right.
Like
That's the biggest barrier is like, there's still people like myself. I was talking with Doug. He's like, I don't really want the metaverse, so I think it's generational, right? I think a lot of the younger kids, and it's kind of normalized. This is someone walking around, talking to a robot versus, in person.
Right.
But going back to, let's pop back to Amazon real quick, because they destroyed their EPS. I think it was like 650% plus. You were talking about some of like Shopify and some of these other e-commerce plays. Obviously, Facebook has e-commerce, but talk to me, like, why do you think like Shopify and some of these e-commerce plays may like jump on that as well?
Yeah, because I mean, like, and this was like I think this is what was really, really good for the market, because Facebook kind of made it seem like all these kind of anything with, tech, or it just weakened tech. Like Facebook really weakened tech because it obviously has been holding tech for a while. Like if Facebook was up 50, a lot of things would have been up
for like a day though. And then like Amazon was like, all right, back up.
Well, I mean, because there's levels to this shit. Like Amazon is Amazon, and like Facebook has always had a chip on its shoulder. So like to think about that in context of like what matters more. If Apple misses and it's like missing is horrendous, like, like it's going to be really bad. But because I haven't been able to get a freaking MacBook for like 4 months, no way. So like even if they miss, it's not going to be like a miss. Like I literally cannot get my MacBook for like 4 months pre-order still. And like, it's really crazy to me because I don't think I've ever seen that kind of backlog. And I know it's like supply chain constraints, this and that, but regardless, Amazon's telling you like, hey, we're the biggest. So like, if we're fine, the best of you will be fine. And I think that's what the market wanted to see, because Facebook was like, oh shit, I don't know what's going on. So like in terms of the cloud sector, in AWS being their cash cow, AWS is why you saw Twilio and Crowd and Net, and like Unity had its own earnings and God knows how long. Haven't seen Twilio or Crowd up $5 or $10 after hours and how long. Shopify was up like 70 points after hours because people are like, oh, okay, we got earnings now. And like, I'm way short and Amazon just destroyed this. And like, if Amazon destroyed AWS, there will be cloud companies that destroy, because like, it's all very much so interwoven. It's just traffic, right? And if you're one of the big guys who gets a lot of traffic, you got more traffic. It's that simple. And I think it's the same for e-commerce, right? That's why Shopify exploded, because Shopify is like kind of a combination between the e-commerce and the AWS. If you really think about it, for like the e-commerce sector, like it's that subscription service that also like generates revenues in multiple ways because of e-commerce. So that's why it got the double.
It's like the infrastructure for it more so for a lot of these e-commerce companies for sure.
Right. It's not AWS in the way that Amazon's AWS, but it's still like Shopify is a cloud company, right? So even though they do
they both have technology. No, I get what you're saying.
No, yeah, but those things and Mealy too. So I'm thinking that like knowing that, we'll start seeing companies move off of their earnings report, because really the most bullish thing was for me was seeing Snapchat rip crazy because of their own report after getting killed by Facebook's. So the market said, all right, like this wasn't right. Let's fix it. Even that's why it was up like squeezing faces. And like, I think that you could see that in a lot of stocks, just in, the ones that have dominated in similar areas. Like Unity was up, 15, 18% today. And I think you'll see a lot more companies that have that reversal, but it will be very much so earnings dependent, because the market is not forgiving on the downside right now, but it is extra nice on the upside. So like if something has a great report, it's going to bust.
We quickly touched on Snapchat, Facebook. We just talked about PayPal has been getting crushed lately. We talked about that a little bit on Spaces, but you don't join us on the Spaces enough, Tony. So like, what are you thinking here on PayPal?
I haven't been able to talk for like a week, but yeah, I think PayPal is just suffering at the hand of a better financial system. And you guys know what I'm talking about. So like, I was never bullish PayPal. And I even said like, I'll swap Square out for Coin here. And like, there are reasons to it. And like, yeah, okay. Did like Coinbase go down like significantly? Yes. Did crypto go down 50%? Yes. Do I think that now at the valuation, when Coinbase launches their NFT marketplace, it's just going to be like,
when is that, by the way?
It could be any day like that. Like, I just don't think that people understand that, like, it's a valuation. Like it will change just from that existing, because it's been talked about for so long. No one's going to buy it until it's open and they see like how it's doing. The smart people.
Well, everyone has a Coinbase account. Half the people, not even half the people, I bet you 1 out of 50 people would know what OpenSea is if I just randomly go up to people on the street.
Yeah, 1 out of 4 people have crypto, and there's 70 million wallets. So I think, there's some math there, but 70 million wallets on Coinbase, 75, probably 80 now. I don't know, but I've been using that statistic for a little while, so I'm sure it's way more. But yeah, OpenSea's valuation is, I don't know, I think it's like 13 or 16 billion last I checked. Yeah, they're going to be crushing because like there was another marketplace that opened up called LooksRare. And I'm honestly like, I like that marketplace a lot. Also ran by like some pretty awesome people. Some like good investors are in there that are really good guys in the crypto space. But the decentralized platform that's now worth like quite a large sum of money. I don't know if it's like fully diluted valuation, but it is in the billies. It fully diluted. So knowing that, like that was a decentralized marketplace that has far, far less users than OpenSea does. And so when Coinbase launches, and that's clearly the most wallets, the most people exist there, 3-4 million on the wait list. That's going to be an instant, like, I think that would be a double on their annual revenue. Like genuinely thinking about how much money OpenSea makes, Coinbase is going to launch the same fees.
You think a double?
I think I think that next year, like if they launch this year, I think that within 6 months, yeah, I think they're going to do double.
Wow. I'd give it like 20%. Everyone kind of does crypto. Maybe, I mean, this is bringing it to the masses, right? So that could actually be a massive catalyst. Well, that will be interesting to see. Double is intense.
I mean, so I'll tell you why, because I'll give you the math behind it. Like, could I be wrong? 100%. Like, is the math supported? Yes. So OpenSea's estimated financial revenue, annual revenue is like 1.2 billion. And so if you think that 1.2 billion off of 1/8 the amount of wallets that are trying to sign up on Coinbase to do NFTs, like that puts you, and Coinbase is going to do 7 to 8 billion in rev this year, next year, and the year after. Even if it's the same amount of volume as OpenSea, even if it's the same, that adds 1.2 billion a year to their revenue. Right. So like that, and estimates are the same for the next 3 years. And I think people think that because crypto is down, Coinbase is down and making less money, but like there are more trades being done now. OpenSea's at its highest amount of volume literally yesterday or 2 days ago. And the amount of transactions happening on the blockchain is super high. So I don't think people understand how this goes. And especially not the analysts. They're like miles off of this, just like they were with Tesla. So like this is something I'm happy to hold, because I don't see how the biggest institution for crypto that literally is the only person that does pretty much prime trusting for these like, yeah, exactly. I did it on purpose. For these like institutions, like, like Tesla and like Morgan Stanley, like Coinbase does that. And so I think that if you're betting on blockchain, Coinbase is like the easiest crypto company that exists on the market. That's not like a Riot or a Mara or something that's like based on a bunch of weird like Monster or MicroStrategy, for example. Like, I don't know if I like would back Saylor, but would I back Brian Armstrong? Yeah. And then like thinking about their VC legs and what they're going to be doing with Coinbase Ventures, it's just an exciting.
Right, Coinbase is good. I like them. They just have so much. They're just getting started, right? It's like the foundation to this new economy and the way things work and business works.
Yeah.
General, so.
And I think this is like a good thing to talk about too. Obviously, like I feel like there's a different trend, obviously, than like it's been a while since we had this podcast, and there will be different trends that come out over time. And the trends that stick are, and you can see which ones have stuck over time, right? Like we know that the cloud trend is ever growing at this point. We know that the e-commerce trend is ever growing, and like
cloud security.
You look at the number, cloud security, and now crypto, because transactions and wallets are going up every day. And so like there will be publicly traded companies that are doing really cool stuff using blockchain that I think are like going to be my big interest for the next year in terms of stocks, but also everything that comes with that's not necessarily blockchain. So like I'm much more interested in Unity now after that report. And I'm also much more interested in Coinbase, knowing that they're going to drop that any minute. And I've been like watching the team like talk about doing the drop and the tweaks and stuff. So is it coming? Yeah, we've been waiting for a few months, but whenever it launches, I think you'll be surprised by how the stock is.
You think he's an acquisition target, or are they getting too big now?
Is what an acquisition target?
Unity. I
mean, everything's an acquisition target to the right company. Like if Apple wants to buy Unity, That's probably a good call.
I'm just thinking with Microsoft buying, Activision.
If they also buy Unity, I mean, you could technically but then you run into the monopoly issue of you just own the entire gaming market. But I mean, Amazon is really nowhere near this. Facebook needs to figure out its own shit right now. But you got Apple, who has all these users, which they could figure out. I think Apple and Microsoft are still going to be the winners in this, because if they were the winners to technology in general, if you really think about it, they put out so many different products. So those guys will win, but there will be so many companies that win with it. So Unity, definitely one that I'm more interested in this year. I still think people really underestimate SE, right? Free Fire's number 1 game. And they're saying
SE's been getting demolished. So I actually had to trim a lot of it. And of course, the day I trim, it pops right back up again. But we got to touch on SE because we talked about it so much, and we can't just talk about it when it's going up. Obviously, it got crushed recently. You think it's kind of bottomed out a little bit, or is there more to go? Because I was talking with a buddy of mine, and they were saying if you look comparably to Coupang, I think the price to earnings ratio is significantly different. So does it justified? I know they're getting into India and they're going to be continuing to grow, and they've been doing that nonstop. They've been growing revenue, but
yeah.
You think this at least reached a short-term bottom, or?
I think it's getting there. I mean, is it there right now? And I don't know, right? It's sticky fingers in this market picking bottoms, but do I think that at the price, it's a joke? Yeah. I think what happens in bear markets and what we've obviously the drop in SE very heavily was just a lot of liquidation and a lot of people dumping and a lot of this person sold, so this person sold, so this person sold, then Tencent sold, and then all these people sold. But Tencent, once again, we talked about this a few times, didn't sell for the wrong reasons, and they still have 18%, which is a lot. But if you look at SE, and you even look back at Amazon, and I know people are SE is not Amazon. No company is exactly like another company.
The charts kind of look similar. I zoomed out once, and they're, maybe it's a biased opinion, or I'm looking at it through that lens, but they do somewhat look similar.
Yeah, I remember when Amazon went down 50% multiple times, 40%, and people were like, "Is this the end of Amazon?" And then now you guys are like, "Amazon's a really staple addition to your portfolio." I think that we got to think about that, right? You're playing a different game. And Amazon still went down 30% in this, or a little more from its highs. So there's SE going from 370 down at 1, so it's down 2/3 after running. Still, I think it's still up almost 1,000% in the last 2 years. You're playing a different game. So I don't know. Somebody asked me on a space. I think Rahul asked me on a space. He's like, "Tony, how do you feel about SE?" People are gonna, first of all, $42. Thank you. And then the next thing about that is these companies obviously get super stretched away because of the conditions of the market, and then everything tightened. SE's got myriad of risks. There's dollar risk. Obviously, that was huge to SE going down, because when we have inflation, right, the dollar is weak, right? And when the dollar is weak, it's good for FX. So it was good for SE and good for Mealy, which is why they were pumping. Mm-hmm. And we start getting this tightening, right? Money supply constricts, the value of the dollar increases. It hits those guys really hard. And SE, even though it's not a Chinese company, obviously had a bunch of China risks just from funds in China owning SE and Tencent selling. So it was just the perfect storm for a company. So many people were balls long and this and that. But do I still think that do I think generational buying up for a lot of companies in time? Yeah. We will look back, whenever the Fed and all this is settled, we'll look back and say, wow, wish I bought that company there. Or maybe not SE. I think so, but I could be wrong. I don't think I am. But there will be a lot of companies that come out of this and you're going to say, wow, that was so clear in hindsight. And I just think that what Amazon showed, A, with AWS, and then B, with their e-commerce, which is all what SE is doing, is that those models work. And I don't know another company that's really taking the Amazon model as hard as, Shopify or SE, which both have. Shopify went down 50% too. And that's the most staple American company, or Canadian company. So think about you have to put everything in context. You just look at something you say so horrible, or genomic stocks are so horrible. XBI had its worst year in decades. So you have to put it in the context of the conditions of the market. And so,
well,
like,
in your
am I
time
still
frame, you want to invest, right? Like I close my eyes. I think SC is, I could feel very comfortable it'll be up in 10 years. Same thing with like Twilio, like short term, who knows what might happen, but this is a really good company. And I'm very confident in 10 years, it's going to be much higher than it is today. Right. So that's also plays a role. You can't just like time it for a weekly or a quarter out necessarily, even sometimes.
Right. And so like, and that's like kind of the perspective here. It's like, are they still hitting on all the trends? Yeah. Are they still winning? Like people can say that Free Fire can talk. First of all, they have like new games coming out based on Free Fire, which will just add users, even though it's not Free Fire, it will. And then they have multiple other games which are in the top 5 of those grossing games like in the world. And then you also can't forget that like being in bed with Tencent, the biggest gaming manufacturer, like it's like, do you think that Tencent would still have 18% if they didn't think that they would do better in gaming? So I think, right, like they sold.
I mean, India is going to be massive for them. Their revenue, I'm just keep watching their revenue. I mean, you can't do that all the time. I think you brought up a good point where like at certain times when the market sucks, it's going to get compressed. But yeah, you look at those revenues and, companies get smart when they need to, and they can tighten those expenses up and stop going to countries if they need to. So,
and another thing I really wanted to point out here that people might be not understanding or like forgetting because so much shit has happened, right? But you can kind of see, like, I've read this tweet from Value, and it was like, pretty simple, but perfectly said. Amazon could survive the .com crash by raising a ton of money just before the crash began. SC now raised a lot of money near the top of the crash. Another parallel, just saying. And so like, those are smart business moves that allowed other companies to become where they are today. Right. So like, if you think that these companies are following other great companies in a similar fashion, obviously there's multiple ways to do something right, but they're not making bad moves. They raised billions at the top nearly. And then from there, they're going to be able to build, and they have been, right? They're using that money constructively. And if you don't think that like the number one attended gaming thing online, like which is Free Fire convention, is not going to be like still a big thing next year, I don't think you're right. Like I think especially like thinking of where the entire realm of the world's going with metaverse and everything.
The 10 years going back up. You said you're not as nervous about it as FinTwits seemed to be, but jobs report came out, 10-year popped up with it. And so that is always nerve wracking for growth. You were talking about crypto kind of being a leading indicator with growth as well. We saw crypto crash down. I think it went down. ETH went down to like 1900. You said it looks like it's back up close to 3000.
Yeah.
So all of these things factored in, we always talk about growth stocks. Like from a high level, what are you looking at the most? I mean, is it the 10-year? Is it some of these earnings reports you're seeing?
I mean, I've just been noticing so much like overlaying crypto to growth. Crypto's just been leading. And so like a week or so ago, I was like talking about ETH, like getting that capitulation bottom to like 1900. And there's like a $625 million like buy squeeze that just pumped it right back up within the hour. And so I feel like that is a really good indicator of everything that's going on right now. As much as people say like crypto is and isn't an inflation hedge, like I don't think it's that. I don't think it's like that. I think it's that crypto is this new risky speculative asset class that is very synonymous in the way it moves with the asset classes that we talk about for growth stocks or tech stocks in general that are not FANG. So I think that because also crypto is like way less liquid, so it can move up and down more. And then also that it's a smaller thing, so it's easier to move. Like I've also talked about like how Mealy used to be an indicator for certain things. Like Mealy used to help me indicate like some things because of the way that it moves and like the liquidity, because it's easier to move it up and down. But because of that, like you'll see it first in those areas. And so that's why I think crypto is doing what it's doing. And crypto is looking pretty bullish. Like it got crushed in the last couple of weeks. Many cryptocurrencies were down 50% plus, if not all of them. But looking at how that impacted stocks, I've watched it lead it like 5 days in a row now. So, looking and seeing where it is now, like ETH is about to be 3,000 and Bitcoin's back over 40K. Those are really big psychological levels. I know for people who trade cryptos, just, that means that like things are not bad. Doesn't mean that they're good, but they're just not horrendous right now. So I think that because crypto has been leading really well, we could see a carryover in growth, but I think it's going to be a very touch and go thing based on obviously what the Fed says, because the Fed just continues to talk. And, there was this like interesting thing that we were talking about today, Avi, how the updated seasonal like adjustment in population models. And like we always talk about how unemployment's like a BS number. And I die hard stand by that, just by the metrics of like, it's like ever say society with ever changing labor needs and constraints and the same BS math to calculate it, not going to make it.
So Tony, now that I'm in the crypto space, I'm checking out a lot more news and kind of aware of what's happening quite a bit more. Do you think this like jump in crypto from your lens and your fun internet friends, is this because of India? Like, so India is now looking like they're going to allow crypto. They're going to tax the shit out of it. But do you think that's the biggest cause of this like recent jolt? Or do you think it's more of some of these other macros that you're talking about, what's happening with the markets?
I think it's really much more like connected to the Fed and just general macros, honestly. But I think that for all the reasons I said about it, like moving first, it is going to continue to be a really good indicator. And I do think over time, it'll probably start decoupling from just general indices, but who knows? Like it might just be like another asset class that just runs in tandem with how the general flows in the world are going. But I think India is like, that's going to be good for crypto, usage. But there's also like other places like Kazakhstan. So basically data centers that are authorized to mint digital currencies in Kazakhstan are like not able to operate until Monday, February 7th. So basically it just means that like the hash rates for what it takes to do mining and crypto transaction and stuff just like been way up because there's just less people doing the transactions overall. So I think that definitely had an impact on it as well. It's just like basically FUD around different reasons, but more so than anything, it is the Fed. It is like the general macro because crypto ran a long time on the thoughts of, the same reasons that growth stocks did, which is why they're moving very, very much in tandem now.
Right. I guess as an indicator, if growth hopefully is soon to follow and it's starting to show a little bit in some of these stocks. But I mean, is this a cause for excitement, do you think yet? Or are you still sleeping with one eye open?
One eye closed, one eye open. Actually, both eyes open. But like, am I like starting to think that like, hey, like I can't believe that the timelines I was reading on Twitter for like stocks and crypto Twitter were just so wildly bearish for so long. Like at some point when you're consistently buying puts and stuff, like you're gonna get that squeeze back. That's just how the market works. I follow Squeeze Metrics, and like one of his tweets says, when the investors buy puts, but the underlying doesn't violently go down, those puts decay. When those puts decay, charm van of all roll down. Dealers incrementally buy back their short position, their delta hedge in the underlying. It's how the S&P 500 works. And the S&P ratio of puts bought to sold daily had a nice little fat, huge spike. And so like when that happens, it's like when people are buying S&P 500 puts like $50 at the money, you need the S&P 500, which already has like historically like that's where you get beta from. It does not move. It moves less than pretty much everything else. And so if you think that it has to go down like 2 to 3% that day or that like next 2 days, if you have like a Monday or a Wednesday or a Friday expiry, that's just like such a good time for the market makers to eat your lunch. Like if the market's down already 50 or 100 and people are buying those puts, you're buying really deep into the hole. So I think that's important to just know that like put call ratios get really skewed in times like these. And if you're shorting in the hole, I'll just be careful. Like even, ARK had a bunch of puts on it, like 67, like around that area. And I think a lot of people thought it was going to go and retest exactly like that previous high from COVID, which is like right around 60, like low 60s. Can it? Sure. Did it go there? Like, did people think it was just going to go straight down there? And then they were going to like, oh, I'm going to take off my shorts there. Oh, I'm going to flip long. Yeah. So I feel like you have to know that, like, the Avi stop I always talk about. I think a lot of people got Avi stopped. And that's why you got that violent bounce back. Then Facebook took it down again. And then Amazon took it back up. So that just means that news is hitting the market. So we've been having a ton of bad news, but a little bit of decent news in the last week, which hopefully the good news starts to overtake the bad, because the Fed really did just kind of like make us think the worst of news is what we were pricing in. So like, Avi, we always talk about unemployment numbers. And I think that it's like important to know that obviously the Fed is making their decisions allegedly, or like what they say is that it's based on data. So like, if you know that we had updated, unemployment numbers, which we always say are BS because it's an ever-changing labor market with ever-changing supply and demand constraints in a different economy with different focuses and the same way to calculate it, which doesn't make sense. But anyway, it was revised over 2 months. So that like November and December was plus 709K. And that was that went out of the June, July, which was revised down 807K. So knowing that, like, that's a huge freaking change. And decisions were made in that time because of that information that we all just assessed. And so the way that I'm thinking about it right now is that, you got this labor force participation rate at like 62.2%. And that's like really not phenomenal, right? Like it's pretty much the same, just if you like account for like population change. And so that's like another reason I was like, unemployment will get back to 4% anyway, even if it's not like busing. And it is at 4% right now. Like unemployment rate moved up to 4%. It just seems like these job reports were creatively created and timed. And I think that now, right, we see the climate that everything, like all the choices that the administration, like the Fed has all made up to here.
Are those not on a...
And like decisions were made as a result of those at that time and at the other time. So like it's very, basically it's not as busing as you were thinking. So like, it just seems like people are factoring in like a 37% chance of a 0.5 rate hike. I don't get it. I do not think it's going to be a 0.5 rate hike. I think we'll do 3.25 hikes and then maturities are going to roll off passively. It just kind of seems like the Fed overplayed the down and is now thinking about like, I think a lot of it's priced in and it might be overpriced in, which gives me the thought that like, hey, these companies that report well are going to now be allowed to run, and the companies that have good news are going to be allowed to run. Sure, we're still like kind of in this, like when risk sells, everything tech or growth, whatever sells besides FANG, but that will continue to happen less and less. And I wouldn't be surprised to start hearing like a little bit more positive news about how this whole process is going to happen throughout the year. Like, I just think people obviously factored in. If you look at like every growth stock and it's like all the craziest things of tapering happen. Like it's like we threw quantitative tightening and all these things in it together. So it's definitely something to be watching for, but just kind of knowing the playing field and seeing today was a big difference. It was a big change in the way to think about it for the next few months.
All right, you're gonna love this one, Tony. We got at Divine3113 asking about one of your favorites. Any thoughts on SEMA 4 would be much appreciated. So they gave you kind of the floor here to take that in the direction you want.
I'll take the floor. I mean, this is definitely one of those names that, we've been saying this for a while, that like companies that don't have the FCF positive and like increasing strength are going to be the ones that get whacked. And then you also have to realize like the number of like, not just funds, but like just general people who have like shorting SPACs as like a basket, right? Like, and it will or will not matter what kind of company it is.
For sure.
Right. So like you have like one SPAC that's done, and Lucid is a very, very specific situation, obviously, just because of the size and who got in it. And like, it was the general market. And then Lucid was the one that was running at that time. So it's like correlation. I don't know if it's causation, but I do think that there's a lot of companies that are going to emerge from the SPAC craze that will do well, especially from like how much everything's been killed. Then you also have to understand like the general market for healthcare, big healthcare companies, like even ones that were like doing super well because of COVID or from COVID or with COVID, whatever that is. But they got crushed too. Like you got Moderna and all these other companies got murdered. And then XBI which is biotech ETF, had its like worst year in decades. Right. And so and knowing all that, like obviously that's market conditions. Like, do I think that it's, especially here, like an extremely cheap company? Yeah. Is this going to be the first thing that rips as soon as things are better? Probably not. Like these companies that have gotten crushed so hard because of this like rapid change in perspective on the entire market in the last like few months, they will come back because they are, I guess, the riskiest ones, right? Because if you look at the entire genomic sector, like, is it going to be massive in 5 to 10 years? Absolutely. Is it massive right now? No. But that's the risk that you take for like long-term investing in like high growth companies that are smaller. especially like, which is like
Do you
every
think, do
genomics
you think
company.
pharmaceutical companies will just come in and swipe these guys up, at these prices?
That's a great call. I do think that like there's a lot of companies that would benefit from just taking do I still think like Beam and Intellia, CRISPR and like Semaphore are going to be like the horsemen of genomics and stuff? Is the sector dead? No, absolutely not. Like we're still making more advancements there than ever. Do I think that, it's not great because like these companies with their share prices, it was obviously more beneficial. The higher the share price you can raise, you can get more money and like you have more ability. Yeah. So it's made it harder, but also knowing that it's such a risk off thing that those companies are like the most risk off things in this type of bear market. Yeah. And so will it take time for those companies to fully develop? Yes, but that was always the case, right? Like these plays were not like the shorter term plays. These were like the 5 or 10 year plays. Is the price of sequencing going down? Yes. Is the number of people getting sequenced and using it going up? Yes. Like are medical advancements in like what everyone's doing, like what Beam's doing, what Intellia, what CRISPR are doing, are those going up and increasing? And are they doing more studies and things are going better for that? Yeah. And so it's very, very much so market dynamics. You look at like NVTA, right? And like, if you really think about which two companies are leading that, right? You've got like Semaphore, NVTA, and ILMN, and all those got crushed. And that's just the space, right? Because that's like NVTA for a different reason.
I think it's just going to go through waves. I think there's going to be breaking news. It will get really hot. And then we haven't even really even entered the government down on this stuff either, right? So it's like, and it has all
NVIDIA
those
is moving there.
to go through.
NVIDIA, Palantir, like other companies that are big in the space, like big in AI, and like they are moving towards trying to do that as well. Like NVIDIA is also very aware that that's an important thing, and Google's been trying to figure out your blood pressure on their watch forever, and like Apple has health on their watch and stuff. So these are all things that in the next 5 or 10 years going to happen. There's just no other way that the future doesn't go that way. But like in this current market climate, it's gross.
All right, Tony, we're going to keep this brief here this week. Let's just get into earnings real quick. Monday, some big names we talk about: Baba, AMZN, Lowe's, Chegg. Tuesday, Spirit Airlines. I don't know who's investing in Spirit Airlines. Centene, Cisco, Chipotle. Apps. Wednesday, we got 2U, Yum Brands, iRobot, and Disney. That'll be interesting there to see what Disney does.
Yeah.
Thursday, Aurora Cannabis, Western Union, Coca-Cola. Cloudflare is going to be a really interesting one too, because Cloudflare has been absolutely demolished. That one has to start to climb back a little bit. Callaway Golf, and then my personal favorite, GoDaddy, a user.
Avi Domain.
Love to buy domains.
I'm looking at apps. I'm looking at net. Like, I think that both those would be really telling. But once again, like I was saying earlier in the pod, Unity ripped a lot. So, I mean, you're shorting stocks that are already down 50, 60% on earnings, especially after you've seen some of these earnings reports come out. Like, I would be surprised if net goes down, and I would be surprised if apps goes down more, because both like net high valuation, but like one of those like people buy it for quality. Even like look where it's at even now. Like it's really still expensive.
Does that put a nail in the coffin though? Like if it were to happen, right? Which it can.
Are you going to put a nail in 40% of the internet?
Well, sure, but I'm just saying stocks like that, right? That have already been down, have a bad earnings.
It does exacerbate it. If you look at Pinterest, like obviously stuff like that, Facebook was already down from where it was and got crushed. So, I mean, I think there's also a different caliber of company like Net. It's hard for me to think that they're not going to like do well, because all these like the advent of what's going on with Web3 and even like the continued growth, obviously in Web2, is all just powered by Cloudflare. Like every site I check on, it's Cloudflare. And a lot of people are using those sites. OpenSea's Cloudflare. It's hard. Like if you know that the things that are being used and supported by Net are doing really good, and you know that Cloud's doing really good because of Amazon. I mean, I don't know. Risk to the upside, my man.
I was talking about Crowd the other day too. Crowd coming back. I think it's time for Crowd to get going again.
Cybersecurity is so big right now.
It's not going away. So that's like my
it'll never. It'll only get bigger.
It's indicator time for CrowdStrike. I think it's ready to go again. I think they got earnings coming up soon.
Yeah, Crowd and Twilio can both like surprise us to the upside. I mean, like I need to look further exactly what Crowd and Twilio's revenues and multiples are, but once again, Cloud Cloud did have, so what one thing I do know, and is like, this is like more of a temporal thing. Like these companies came back to their valuations pre-COVID, right? So like, let's not misunderstand the price for the company, right? And I hate saying this because I sound like a boomer, but let's not, because
value,
like, yeah, value, like SE doing 14 bill next 12 months, 3 bill EBITDA. The only reason they're not just net big positive because of Garena is because they're expanding Shopee. So like same thing as Amazon. And like, I don't know, if you have like longer than a 5-second attention span, you kind of see where these companies are going to go. And I think like Twilio and Crowd, as well as even Snowflake's held up extremely well for its valuation.
Snow is a beast. I mean, any company that has that net retention, I think this is like one of the
right
where they don't need to even add any new customers. They're still growing.
Yeah. And Unity, like, and the reason why I'm like, you're saying like, is anything going to get put a nail in the coffin for net? Like, I don't think you can do that. I think Net's like one of those like protected companies in terms of like, I don't think it's going back to 40 by chance at all. Just because they have such a grasp on what their operations are, like in the percent of things that they run, is like pretty big and it's pretty integral, and people pay up a value for it. And that's why it even went to where it was 200 ridiculous. Yeah. I remember posting that chart and I was like, everyone's like, I'm buying at 220, I'm buying at 200, 180. And I'm like, you are exit liquidity, sir. And you were exit liquidity. And so like now think about, are you going to be entry liquidity for somebody else? Are you dumping the lows to somebody who's smarter than you and buying the lows? I mean, I'm not saying that for like specifically now. I'm saying like, think about that overall, because if you like have an investing style or strategy, and I guess this is the Tony sign off, Bobby, because it's just kind of happening.
Just
like if you have,
keep rolling.
if you have a strategy and your strategy starts becoming more and more attractive to you, right? Like there's the market can remain irrational longer than you can stay solvent. And that's very true. But if you kind of have that perspective and you're a different kind of like invader, right? And you have cash for the sidelines and you're looking at these companies, like, do you buy right now? Like, I would never say that, but I would say start looking around, because I think that the news from where it is right now, from being so bad, it could change like quickly to the upside. Whether that's sustained or not, I don't know, but you're seeing like relative strength against even FANG and other S&P stocks. Like you've been seeing growth have a little bit of relative strength in the last 2 days. So I think that's important to note. And I also think that seeing what Unity did, Unity was like really big for me, just because it has a super high valuation and people bought it up because they said that's worth it. Right? That squeeze, sure, maybe some people like uncovered, maybe some people also slammed, but the movement was up, and it was up on a day where, a bunch of growth was up, but it was up a ton. And so like it actually moved properly on a good report, 44% growth and a bunch of like higher growth between different segments as well. So like that was good. Like, do I think you'll get that with net? Yeah. Will the market react the same? Honestly, I think they might be pretty close in valuation, I guess, at these prices. Like, is it likely that net upsets and goes up? I would think so. Honestly, I would say it probably goes up on earnings. And like, do the other clouds, if they do what Unity did, then they will go up, which is nice to see. Like, is Unity going to retrace its move next week? Like, if the market's really bad, potentially. But do I think that like that's kind of like good earnings like that might set in specific bottoms for good companies that can start decoupling from the rest of the garbage? Yes. So that's like what I'm going to start looking for even more so. And definitely want to go back to like the beginning roots of pounding the table, where we just looking at these thesis plays, like looking at the thesis for an entire theme, right? Like thinking about what are the biggest developments happening in the world? Where's the most growth? Where are the most users? And what are people paying up for that makes their life more in some way, just more in general? So that's definitely where you have to kind of like look at the markets this year, because companies are starting to, again, move a little more like on their own. And so that's when you can start kind of thinking where you want to be planning for the next year, because at some point, whether the S&P still drops another 10 or 20% from here, at some point, these things turn. And are we starting to get a little bit of it now? Yeah. Are some people getting excited? Yeah. Does crypto make me think that it could be like a little bit more bullish in the jobs report and everything we mentioned than people expected? I do think so. But once again, the Fed can come out tomorrow and say something that just makes everything we just said different. So be aware of the situation. Like know the controllers of the game you're playing, right? Know the controls on your Xbox. So that's the best advice I can give right now, because it's definitely a daily thing. You know, you collect a couple good pieces of news and you have a couple less bad pieces of news. And then one day someone's going to say something that the market likes more, or someone's going to say something the market likes bad. But there are companies that are moving in the right direction because of what they're doing specifically. So now that I started seeing that, you know, Amazon, Google, Facebook, Snap, Unity, those differences in moves up and down is saying people are being very selective. And so you also have to be very selective. And with that being said, Pounders, I'm glad you chose to come and join in on Pounding the Table. And we'll be back next week for another episode
of Pounding the Table. Keep trucking, guys. If you guys,
I'd rather die than have no freedom. Rather die than have no freedom.
This is a freedom pod. By the way, Dave Millhouse, you guys should check out his pod.
Every night I flex, I'm making big moves. That's a big move. Big money, big moves. That's a big move. I'm making big moves. That's a big move. Big money, big moves. That's a big move. Yeah. They can play, don't talk about it. Master P, I'm about it. This one here for all that try to count me out and they still counting. Honestly, I never doubt it. Say the top is never crowded. Well, I'm trying to climb the mountain till I need a few accountants. Stock is rising, perfect timing. I'm in Brickle with the tribe. Shawty sliding, she want sushi, she want eel sauce for the rice. I just peel off at the light, took her heels off for the ride. Don't say real talk, just a lie. I'm a real one, I provide, yeah. Drip on 100.